Within the next 72 hours, Bitcoin is likely to break out of a 8-day long triangular consolidation. We're going to be discussing this and so much more. Let's go ahead and dive in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic weekend. In today's video, we're going to be taking a look at Bitcoin on the short term and the macro, discussing the current price action, the 8-day long triangular consolidation, the likely next moves, and key levels to be watching out for. We're also going to be taking a look at the macro charts, going over a variety of indicators such as the Vortex trend tracker, the baseline of the Ichimoku cloud, discussing the next bull run, and why we believe we are likely going to see a correction pretty soon. Now, before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading card and education chat, our trade setup chat, our help, our news, and our daily video chat. If you're interested in getting access to all of that with over 600 members, contact me in the pinned comment of the free channel for more information, or go ahead and check out our trading track record in that same message. Let's go ahead, guys, and dive on right into the video, starting on that market data. So as you know, the weekend comes around, and with that, volatility and volume jumps away. So we see a 25% reduction in 24-hour volume, sitting at around 80 billion over here, and we've seen a 31% reduction in 24-hour liquidations, sitting at 106 million. With that volatility going away, on the 30-day, we are starting to see that volatility index plateau and move slightly downwards, which is expected, right? If we take a look at the recent price action, we have seen volatility reduce. We can take a look at our 50 EMA over here with our marker cipher A price action significantly spaced out from the 50 EMA, which is massive gaps, which indicates increased periods of volatility. And since then, we have now seen the price action kind of cluster around that 50, which is suggestive of decreased or decreasing volatility. So with that, the volatility index is starting to fall down on the 30, and on the 60 period, we haven't really seen too much change, because again, it is accounting for a larger amount of days. Moving over to the liquidation data over here, we can see in the 24-hour period, we have seen almost identical. It's very rare we see identical, but we have seen almost identical amounts of longs and shorts direct, with 53.6 million in longs and 53.1 million in shorts. Again, with the price action chopping essentially up and down and up and down in this tight compression, this is what we will call a chop zone. And chop zones are very hard to trade unless you can identify the parameters of which the chop develops in, but most of the time the chop parameters broaden or tighten prior to you being able to correctly or fully identify the pattern it actually is moving in. So a very tricky time to trade. The price action generally doesn't do too much. We see these swings up and down on the short term, but overall structural levels are very rarely impacted during these chop zones. So we've seen a whole lot of nothing really in the last 8 days, a whole lot of nothing, which is the best way to put it, if I'm being honest. Moving over to the DXY, if we take a look at the DXY did drop down. We were expecting a drop to this 101.5 zone. It does appear we didn't quite drop that low. We came down to 101.7. We do still expect that trend to continue downwards. However, we can see on that daily chart, we do have a slight bullish divergence developing over here, which could indicate this downtrend is beginning or will likely start to reverse. Now, however, while we remain above a gap, or should I say below this green zone, this again is going to be a level of resistance. We are still looking for a move down into this range of support. Again, if we do clear above this level, we will then need to break above this short-term downtrend to actually flip short-term bullish again. Until then, the DXY is still relatively bearish. Looking at the S&P 500 with again a retest of that weekly high, and this is all-time high in the weekly chart, the weekly close. We did push up into this level of resistance. We have not yet broken through it. Very interesting to see what happens in a new week. We would like to see a weekly candle close above this horizontal black line. Again, this level is still going to be acting as resistance until we clear it. So this is the perfect potential opportunity for rejections on the S&P 500 or corrections on the short term back towards this trend line. If we do break above this, however, we could see something like what we saw on the Dow Jones, which was a nice strong break up over the next 2 weeks, moving to a brand new all-time high. Again, watching how the price develops here, as we are in historical price discovery. We don't have any historical data in this range, and therefore it is very hard to project where the Dow Jones could potentially go next, other than to say where the lower levels of interest and support are. And currently this level of resistance is now a level of support. So again, if we retest it, that is healthy. If we lose it, that is unhealthy. Let's go ahead, guys, and jump over to Bitcoin. Now, before we do, a quick word from Bitget and BingX, and we'll jump in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and dive into Bitcoin. And as we said in today's video, we're going to be discussing, I guess, two perspectives. Number one, the short term, discussing what we expect to happen, what the charts are suggesting, what the likely moves are, and what levels you should be watching, and why the next 3 days, the next 72 hours, will likely facilitate a break of this range. And number two, we're going to be discussing the macro charts in relation to the current uptrend, potential rejection and short-term healthy downtrend, and the next bull run. So let's go ahead, guys, and start on that short term and then jump over to the macro charts. So as you know, and as we've been discussing in today's video already, the short term has done a whole lot of absolutely nothing. And it's been consolidating in a developing triangular formation over the past 8 days, ever since we created this high, which is 0.1, our low, which is 0.2, we have 0.3, we have 0.4, yet to form 0.5, and thus this is a developing structure. So at the moment, we are in a developing triangular structure. Again, a directional break will likely determine the continuation from this range. If we take a look at where we are as terms of time to the potential and assumed apex, we are looking at around 3 days and 8 hours, which is around about 80 hours, 72 hours, 80 hours is what we're looking at until this current developed range, this triangular formation, will actually come to an end. And when we generally see the price move in the later half of these consolidation phases, we generally increase the probability excuse me, for a directional breakout as volatility begins to compress and compress and compress, and we eventually see a surge in volatility with the directional break. So we are expecting a move up or a move down. We'll discuss this in a second. Within this period, within the next 3 days, we are likely going to see a directional move. Now, if we go ahead and annotate these levels, we have got our uptrend. This is going to be our short-term uptrend. I will just go uptrend, as well as bearish trigger. Okay, this is our short-term uptrend and bearish trigger, and then we have got the opposite. We've got a short-term downtrend and bullish trigger. So again, these downtrends are bullish triggers, these uptrends are bearish triggers, because if we break above the downtrend, we trigger this reversal in the consolidation, which will result in the increased probability that the trend is moving upwards, as it shows relative strength in comparison to the recent price action within the consolidation zone. It's a bit of a mouthful, but you can play it again if you want to hear that. So looking at the current price action within the next 3 days, let's assume we break out. We expect a breakout. If we break upwards, we are still looking at two levels. Number one, we are looking at this diagonal level. Of course, we need to break above this diagonal bullish trigger. And number two, we've got a horizontal point of resistance, which we've gone ahead and marked out as this dotted trend line, which is sitting around 43,100, 43,130, give or take, around that level. If we break above both these levels, we will likely continue this trend upwards, and this range again will be considered deviation from the trend. Okay, so we have this horizontal trend over here. We'll be expecting a rally back up to retest these highs at least to around 44,000. If we break through 44,000, that is when we expect a continuation to 46. So let's go ahead and draw this in on a horizontal perspective. We've got a trigger point, we've got a level of resistance. Okay, so we've got this level here, which is our upper, so a range high trigger. Okay, we've got our diagonal resistance, okay, and we've got our horizontal resistance from our prior range, which is represented as the low of this prior horizontal cluster of price action. So assuming we break out, we will likely break above this level. We can expect a short-term move towards our range high, which is going to be at 44,000. This level is a resistance, it's acted as a resistance numerous times in the past. If we break above 44K, we will likely see that continuation into 46, potentially even higher to 48,000. Again, if we look at the higher time frame charts, let's go ahead and just take a look at this really quickly, guys, on the higher time frame. Excuse that random line. This is going to be this chart over here. We can see the levels on the high time frame represented by these zones. The next level of resistance is at 46 to 48K level right over here. So that is where we expect the move to continue to if we do break above 44K. So that is the bullish case scenario. Now, what is the probability of that occurring? The probability of that occurring, as opposed to the bearish scenario, which we'll discuss in just a moment, is relatively equal on the short term, okay? It is relatively equal on the short term, as this triangular formation, this pennant, is a neutral pattern, okay? It is a neutral pattern. It has relatively equal probabilities of a break up and a breakdown. However, when we zoom out to a higher time frame, the probability that we continue upwards on a higher time frame, not just a day or a week, we're talking a month or two, is greater than downwards. We'll discuss why in just a moment. So let's go ahead and talk about the bearish scenario. If we do break downwards, activating that short-term uptrend bearish trigger, we can then expect a continuation down to our support, which is going to be that $40,000 support reflected by this level on the high time frame, 40K support, potentially dipping towards the uptrend, which is that major uptrending support line, which again has been providing support for around 2 full months. Provided we remain above this uptrend line, we are technically in a monthly uptrend, and only if we lose that level will we actually run the risk of losing this 38K level of support, converting this support into resistance, and crashing much, much lower. We'll actually discuss the probability of that one, particularly in a moment when we do a higher time frame analysis. So really quickly, to summarize, short-term consolidation, 8 days, expecting an end in 3 days. If we break above, we are looking for a move to 44K. If we break above 44K, we look for a continuation to the upper level of resistance at 46 to 48,000. The short-term uptrend is acting as a bearish trigger for a short-term continuation downwards to 40,000 to potentially the uptrending major level of support. Even if that does get reached, the trend is still up according to a macro chart, which is reflected by this major 2-month-long uptrend. If this uptrend is lost and we lose this uptrend, only then does this trend become relatively bearish on the daily and 3-day chart, as we would have lost the 38K trigger level, which is a trigger As we can see over here, the 38k level is a bearish trigger for a continuation down to our major level, which is this low at, again, 33.38. So if we do lose 38k, we run the risk, and it's not valid, it's not confirming this, but we're exposed to this much downside risk immediately, which is very, very bad, of course, in terms of the macro charts. Now, even if we do see that, we do have to be aware this is the yearly uptrend. We are still above the yearly uptrending line. So again, depending on the time frame you are viewing these things will determine how actually impactful it is on the macro chart. If we're talking about the current 2-month-long uptrend, which is this trend line over here, okay, this black trend line, while we remain above this trend line, we are short-term bullish for a continuation to 46k. If we lose this trend line, we run the risk of correcting back down to 32. However, again, the yearly uptrend is the major trend line that, if lost, will potentially throw a spanner in the works in terms of developing bull run and the next 4-year cycle bull run actually occurring. So the major level we need to hold for the bulls to remain in macro control is actually this trend line here, not this trend line. So now that we know that, what are the probabilities of a correction through this level, and how impactful could that actually be, slash would it be actually expected that we see something like that? So now we need to go over to the macro charts. And we've got a few different charts we want to take a look at. We want to first and foremost take a look at the Vortex trend indicator, and we want to go ahead and also take a look at the baseline of the Ichimoku cloud on the monthly chart, as that is indicating two potential things. First and foremost, the Vortex trend indicator, we have a very interesting trend that has developed on this trend indicator. We've got these local high points right over here, right over here, right over here, and now these don't always correspond with the all-time highs for Bitcoin. So we do have to make that very apparent right now. If we take a look, this reflected as this high. If we take a look, in this instance, it did actually reflect as the all-time high. If we take a look in 2021, it didn't reflect as the all-time high. So it is not necessarily telling us when the all-time high is going to be in, but what it does tell us is it does tell us when we could potentially expect to see higher time frame corrections. Now, whether that correction be healthy or unhealthy determines or is determined based on the structural levels in which that correction actually breaks or is unable to break. However, it can indicate corrections that will come within a uptrend. For example, we'll show you, okay, we saw this level here, we saw a correction. However, that correction did not actually flip the charts macro bearish. We continued back upwards to reach an all-time high. So that's just one example of how this can be actually utilized and why we should not assume just because we're seeing developing weakness on this that we are going to see a macro downtrend. If we do take this trend across, we can see we have the trend actually over here. And the Vortex indicator is developing quite close to it. Really quickly, the Vortex indicator shows us relative strength of a trend. So when it's solid green, it's telling us we have an aggressive uptrend. When it's light green, we have a weakening uptrend. Red, we have an aggressive downtrend. Light red, we have a weakening downtrend. That is all it is telling us, okay? We have these shifting points. It reflects a shift from a weak downtrend into a strong uptrend, and vice versa from a weak downtrend into a strong uptrend. So looking at the current price action, we could actually potentially see the Vortex indicator continue upwards, which would facilitate a leg up for Bitcoin to potentially 46, 48k, which we would then expect a rejection from. Again, the 46 to 48k level is a major source of high time frame resistance as it indicates, the major trigger point for the next bull run. Remember, the 48k level is that dotted trend line. Every single time in the past, we have broken through the horizontal trend line and close a monthly candle above it, we end up going towards a dotted trend line. I've been saying this for so long. I've been saying this ever since back down over here, guys. We look for a monthly close above the solid trend line. We look for a monthly close above the solid trend line. We look for a monthly close above the solid trend line. We then expect a continuation toward the dotted trend line, which is sitting at 48k. From 48k, we expect to see a rejection. We saw a rejection here, a 35% rejection. We saw a rejection here, a 45% correction. And we could potentially be seeing a rejection from here once more. And the Vortex indicator is telling us that we do have some more movement upwards. We do have some more space upwards to push higher until we potentially see that trend reverse. So it is telling me, while we remain above this major uptrending support line, we are still expecting a move to 46 to 48k. When we reach 46 to 48k, that is when we expect a correction for Bitcoin. Historically, these corrections can be quite aggressive. We've seen 35%, we've seen 40% in the past. So back to this chart up here, sorry. We've seen what? 35% correction from our dotted trend line. We've seen, let's go ahead and drag this one from a dotted trend line down to a solid trend line, a 45% correction. Let's just assume we see a 30% correction. That would take us, you know, from 46k, 48k to 34,000 again, which will be quite brutal if that does occur. However, more importantly, even if we see that, we would not be losing this bearish trigger, because if we do lose that bearish trigger, the 33.350 bearish trigger, that actually is the trigger for a flash crash down to 30,600, which loses the 32k major horizontal support and puts us back under this range to retest that yearly uptrend. So very, very bad stuff if that develops. So if we do see a retest of 46 to 48, prior to a breakdown of this uptrend, the correction that will actually come from that range will be less damaging on the higher time frame and pose less macro trend risk, as opposed to if we saw that correction develop from where we are right now. So that is why we would like to see the price go higher. However, there is a big limitation to this, and that is the baseline of the Ichimoku cloud. If we go ahead and delete these crosses really quickly, and I want you to focus on that red line that goes to the price action, we generally never see a cross on the monthly chart of the baseline of the Ichimoku cloud, rejection here, okay, until we cross over into the 4-year cycle bull run territory, which again is the halving. So we do not expect the baseline of the Ichimoku cloud to have a monthly close above it until at least April 2024, according to historical data. That would indicate we have 15 days to push upwards on the Vortex indicator, to retest, to push upwards, to retest and reject, all within 15 days, guys. It is possible, okay? It is possible, but it is very unlikely we see all of that play out in 15 days. So then that poses the question, are we going to see a correction prior to retesting the dollar trend line? And we have never seen that happen in the past, because we've seen corrections develop from the dollar trend line. Or are we going to see a monthly close above the baseline prior to the halving, which we have never seen before? Both of these scenarios, whether it be the first or the second, could potentially facilitate an early bull run and actually destroy the 4-year cycle, and thus pose a risk that the all-time high expectation of October 8th, 2025 will be pushed backwards to an earlier date. Things to think about, things to watch, things to analyze. Thanks for tuning in. I hope you have a fantastic day. Check out the Crypto Academy courses. It is the website down below. It's a 10-year course. We teach you everything from the fundamental concepts of TA to basics of technical analysis, to market patterns, market structures, technical indicators, candlesticks, and market psychology. If you're interested in learning that, go ahead and contact me down below. Let's go ahead and end up the video, and I'll catch you guys in the next one. Cheers.